Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. Y'all know that drill. Hit that like button and subscribe if you already haven't. It's would really help out this channel and get the algorithms going. And I just wanted to get a couple of points in, just doing a couple of. If you look at it, Friday, the big news: job numbers, non-farm payrolls, 303,000 jobs created, blowing out the consensus. Now, we know that these numbers are false. They're not true. They're at this point, they're completely made up. I even saw a tweet by some normie money manager saying, "Whether you believe the numbers or not, Wall Street likes them." The fact that like a normal money manager used to manage 100 million is now having to say that whether you believe the numbers or not shows that the trend in the general population is shifting. No one's believing these job numbers anymore. And I think they've been, in fact, not think, but I strongly believe they've been lying about these numbers for quite some time. But the good news is that the equities market, that went up. Of course, it's an election year. They're going to do what they can to juice up the equity markets. So expect that for the rest of this year or for most of this year. There are real problems that are going to affect the financial markets, but they're going to do what they can. And that's always been my position. But in terms of the gold market, gold really shot up. And it went up big league. As they say, gold finished the day up $38.50. Silver, $27.54, over 26 on a weekly close. Now, I'll be the first one to admit I'm not a technical analyst, and I don't pretend to be one, and I don't pretend to know exactly what. I just know it's a good thing. And this just goes to show, but my point about economic data pointing it, I'm looking at a gold chart right now. It's on Kitco. I'm not doing the Zoom thing yet where I can show, but at 828, gold was at 2295, 2,295. And then right after the job reports number, it went down to 2281. This is at 836 a.m. Now the job reports came out. Then it started going up. And at 8:45 it was 2289. Still down 2289. And then around 9:20. And that to me is healthy. It shows there's a lot of buy the dip in the gold market. Maybe it was central banks buying. I don't know exactly. But it also goes to show that if the economic data was poor, gold would have shot up a lot higher. And so, yeah, this is a healthy market that it's still rallying on bad news on gold. And if it was bad jobs numbers, it would have been a lot higher. But this is, if you look at the stock markets, if these things keep going, this is why I'm worried about the gold market petering out in a year or 12 months. If you look at 2019 through August of 2020, why? Sentiment of opening up, the economy being back to being strong, being good, the poison shots being a solution, that, and then inflation being transitory. That's why I'm saying right now, I don't believe the economics great, but if they're able to still print out false propaganda like this, gold will eventually. That's why I say my target's 2,600, could be 3,000. But in order to have a sustained multi-year bull market in gold, there needs to be a recession. And I think that's coming, and that's why I'd say 2030 or somewhere around that time. I think things will get so bad they'll have to admit through the economic data they're in recession. But there are some positive developments today. Zimbabwe, I'll post this article below, is now introducing a new gold-backed currency. all currencies used to be fiat. They're doing this to fight inflation. And I hope they give this time and this is correct. I hope they don't, and I hope they price it based on market value. They don't pull a Winston Churchill where he pegged it at the price before the war, and caused massive deflation. They peg it at the current price to provide stability. I hope that's what they do and they do it correctly. But if this works, it will start being remonetized as gold, and that goes to my projections of a 20 to 30 year bull market in gold, and gold outperforming the stock market. Not just yet, but it will. The other thing I want to get into, everyone talks about central bank. I see this on Twitter. It's just not true. Central bank demand does not mean. And I'll have one of these is a World Economic Forum. I don't like them. But this article, this part, it said central bank's attitude towards gold started changing following the 1997 Asian financial and later in 2007 through 8 crisis. Since 2010, central banks have been net buyers of gold on an annual basis. So here's the thing. From 2000 through 2010, in a rip-roaring bull market where gold went from 250 to 1900, central banks were a net seller of gold. Central bank demand does not increase the price of gold. Famous the brown bottom, where they liquidated so much treasury, gold from its treasury or central banks, whatever it's called, in the early 2000s. I'm just doing this off the top of my head. And it's known as the brown bottom because that was the bottom of the market. Sold all its gold. And central banks, if you look at this article, I highlighted it, central bank attitudes towards, since 2010, they've been net buyers. From 2011, gold went from 1921 all the way down to 1921, all the way down to roughly 1,000 in 2015. And in 2011, it was around 1,100. So central bank gold, and you hear all this nonsense about China. 2012 sees gold demand hit record level. This is gold.org, and says Q4 2012, 4% year on year as India, China, and central banks drive demand. That was during the bear market in gold. I'll post these articles. Central bank buying for the full years rose 17% compared to 2011, totaling 5,346 highest level tons, the highest level since 1964. Central bank purchases stood at 145.0 tons in Q4, up 29% on the corresponding quarter in the previous year, making the 8th consecutive quarter in central banks have been net purchasers of gold. That was during a bear market in gold. So don't buy this central bank. In my opinion, what's causing it is we went from Goldilocks, soft landing, and a couple of weeks ago we had a high recession, or high inflation data. The economic data the last couple of weeks has been, I would say for the last couple months has been mixed now, especially with the inflation. And they were pricing in Goldilocks, soft landing. So sentiment has been changed. And the Fed cutting rates. I think the Fed cutting rates now, going from hiking to cutting rates. And the other thing is, if you've listened to this channel, I haven't talked about it too much. I'm not going to go into details. I don't know what the YouTube terms of service is. But we're also at war. And this is not a good thing. It's not a good thing for humanity. It's not a good thing for anyone, any common citizen. And this is a very large-scale war. Russia, Ukraine, Israel, it's all connected. And we have psychopaths in power that none of them want peace. And so this is a very, very scary thing. And I don't know how else to put it in other words. I'm not going to assign blame or whose or what. But war is bullish for gold. Bearish for everything else. And the sad thing is, I think this war, if we had rational leaders, this could stop immediately. But yeah, and I was the only channel that really talked about this. I mean, maybe there was a couple others. I think Gerald Salente talked about it, and I don't think he fully understands it, though. I really don't. I mean, I don't say that to insult him, but at least he's talking about it. I know a lot of people in the anti-war movement that don't even understand it, and that's why you never see one. The only thing is Free Palestine. You don't really see an anti-war movement anymore. And so anyway, but those are the things I want to get in. Gold, oil. I think the markets are sniffing out a war, unfortunately. And so, but yeah, gold. Central bank demand does not mean anything. I'll post these articles, but central banks have been net buyers since 2010, and there was a 9-year bear market, really, since then. And this is a positive development, Zimbabwe. And yeah, it's a buy the dip environment, in my opinion. I'm not buying anything gold, silver related. I'm so positioned that when this finally comes to a peak, I will be able to sell, pay off some loans, live in Easy Street. Nah, probably not. And that's all for today. I hope you have a good weekend. And if you like this video, hit that like button, subscribe, and it costs you nothing. If you've listened all the way through, you like this video because I'm not famous, and like that video, subscribe. That's how you can support the channel, and it costs you nothing to do. All right, have a good day.